All right, guys, time now to address your questions on the market, individual stock, industry, these wild gyrations. In fact, here's a real good one that Nick asked on Twitter. He said, okay, why do companies like Take-Two beat quarterly estimate, yet their prices drop? He's talking about the shares. I think it's an amazing question, particularly in earnings season, because for me, this is the most frustrating time to be an investor, and this is a time that has destroyed portfolios more so than anything I can think of. But here's the rub. That destruction, more often than not, it's from knee-jerk selling, particularly of great companies, because, you know, they didn't meet the short-term whims of Wall Street. Now, when it comes to earnings, nothing matters more, and I'm sure you guys are starting to learn this if you don't know this, guidance, right? Most companies will assign guidance, at least for the current quarter. Some will opine on the entire year. And since knee-jerk moves are based on expectations, what CEOs try to do is it's like the oldest rule of thumb, right? Politicians do this a lot of time. Low hurdles, give them low promises, and then if you can clear them, and sometimes that backfires on these guys. The quality of earnings, also very important to me. Gross operating margins, that's really great because, let's face it, the bottom line can't be manipulated. Buybacks, accounting tricks. I like to look higher up on the income statement to see exactly what's going on, how much it costs to create a product and a service. I want to see pricing power. The conference call, obviously, very critical. In fact, many analysts will put more emphasis on the tone of the CEO than the actual words. And then guess what? There's the earnings, the actual news. So the company beat. Sometimes it's old news. It's 3 months back. But you know what? The fact is you should factor those things in, like the guidance and the caution, because when you get with a company missing or beating, it can give you a sort of feel of what's going on and what may happen down the road. So here's the real deal, guys. I know it's a dumb game. It can be exaggerated. I personally would love to see biannual reports. This quarterly stuff is stupid. I think management teams that try to sway Wall Street every 3 months will not be successful in the long run. So as far as Take-Two is concerned, I think the problem is that they had a real huge beat. But when they raised their guidance and you take them to the beat, it wasn't what the investors wanted to see. Margins, though, did expand. I think the company's doing absolutely amazing. One of their rivals reported today after the bell. It's down. It looks like maybe they've been taking market share. If I'm a long-term investor, I would not be shaken out of this stock, although I understand your frustration. What do you think, guys? I mean, this is a crazy time.
Yeah, I mean, first of all, I think this is a really good company, and I think they did put up great numbers. I think what frustrates investors is they have a history of delays. They have a history of whether it's...
But in general, though, Jim, I mean, listen, we're going to talk later in the show. GoPro was at 1.62. Now it's down $6. Twitter was down. Now it's up 5. Yep. You know, I mean, it's just, it's absolutely, it's crazy. It's nuts.
But again, and I'm not a seller of this. I would hold that position. I'm just saying that they
What makes you hold, though, after earnings? How do you ignore the initial reaction?
I would have asked, if I had invested in this company, I would have done it because I believe they're putting out products that their customers want. And if you look at the reviews in their game, if you look at how they're being received, they're deemed to be in a unique category.
Good game pipeline, too. I mean, future products are going to be really good. But the tough thing about Take-Two, for example, the stock's up 50% in the last 52 weeks, okay? It's almost up 1% a week in the last 52 weeks. And it becomes a victim of its own success, right? Because if you look at previous earnings where they did beat and guided higher, the stock was rewarded. But now it's so high, it's tough to beat.
But should the stock be punished because it was successful?
I don't know if it should be punished, Charles, but it is going to backfill some of that move, which is where maybe you'd add to it if you had some cash.
If you already owned it, though, would you buy or sell it? I mean,
I'd keep it because, like Jim said, if you still like the company, like the products, like the pipeline, and the guidance is good, you don't run.
All right, Daryl, how do you handle it? These earnings that come out that are fantastic, top, bottom line, guidance may be off a penny and the stock gets crushed.
You know, I think you've got to just look through it, to be honest, Charles. I know that's hard to do, and I agree with you. I would love to see the incentive structure system, particularly of corporate CEOs and management teams, to be more tied to longer-term metrics than this quarter-over-quarter stuff. I think that makes all the sense in the world. It would smooth investor returns. It would make it a better situation for all of us.
All right, guys, thanks a lot. That was a great question. All right, guys, always be sure to tweet me at CV Payne with any of these questions. We'd love to answer them.